What's up, guys? How's everybody doing? Welcome to the stream. It's just after 5 p.m. Eastern Standard Time, and it's Wednesday. We'll get started in a minute. Just give me a quick sound check. Let me just put on some background noise. How's it sound? Sound is good? Cool. Welcome. Gain is too high? Well, it sucks for everybody because I don't know how to figure that out. No, I do. Hold on one sec. Actually, I can see that it is going past the threshold into the red. So maybe if I make some adjustments. Something is turned up too much. One sec. Is that better? I hear a buzzing. Hold on one second. Now let me just move some stuff around because it's probably because I redid my desk and I had the microphone like half on the wood and half on the pad, so maybe that makes sense. Let me just undo something. Bear with me. Cool. Is that any better? Turkish Martha Stewart. Nice. Better. Okay. Yeah, I redid my desk. I had I have a pretty big setup. I have a 49-inch curved, 232s on the top of that, and then 132 turned to the side as a vertical monitor. And I had the whole monitor set up behind the computer on different stands, and I couldn't line it up perfectly, and that was really messing with me because my screens were kind of like offset. So I ended up getting this new monitor mount and redoing my entire desk. So I had to shuffle some stuff. But how's everyone doing today? So like I said, get started in a second, work out some of the kinks in the beginning. For those of you that are just tuning in, my name is Ryan, also known as Cantering Clark. And myself and my co-founder, Josh Rager, we are, my partner, we are the co-founders of Blockroots. We don't do a lot of talking about Blockroots. We don't really like to shill anything. But this is our YouTube channel, and we are getting back on the horse when it comes to putting out consistent live streams, and Josh is going to be uploading some videos again throughout the week. So, a while back, pre-bull market, when everyone had time and everyone wasn't burnt out, we used to put out a lot of videos, a lot of recorded content. And, when the market gets moving, it makes sense to be one place more than the other. And unfortunately, content is secondary and suffered because of that. But getting back on it right now, I said I was going to do 5 streams a week, and this is the 3rd stream. So I appreciate all of you tuning in. If you're not a subscriber, what you'll notice is that I've made it so that you cannot comment. But fortunately for you, it's very easy to be able to comment and participate in the chat. All you have to do is subscribe. So subscribe to the YouTube channel. We're a non-sensationalist group of dudes, right? Duo of dudes. We keep it real, tell it like it is, call a spade. I'm going to sit here and tell you right away that chances are that if there's 100 of you watching, that less than 10 of you will go on to be profitable traders in the next 3 years or be able to last. Although, maybe one can say that those of you who consistently show up, if we consistently have the same people show up, maybe that rate will improve and we'll have a different attrition rate than if it was just like a random sample of a bunch of new people showing up. But we keep it real. As you can tell, it says, this is not financial advice. Trading is extremely risky. You can and likely will lose all your money. So some people will call it tuition and consistently show up and hopefully improve. Others will continuously show up, continuously lose money, and never make a point about changing anything. And I've said this before, one of the things you have to think of if you're trying to become a profitable trader is, sort of like an addict. Again, to be as real as possible, sort of like an addict. You get sick and tired of being sick and tired. Well, you have to at some point either quit and just give up, or just get sick and tired of doing the same dumb shit over and over again. And for the most part, when you're talking to new traders, that means like not chasing price and waiting for price to come to you. Obviously, there's a lot more that's involved. But anyway, none of this is financial advice, right? So this is just my commentary, my market color, right? How I'm looking at the market through my lens. I'm primarily an intraday trader. I take larger position trades when the opportunities present themselves, but obviously that's a lot more few and far in between than all the opportunities that take place within a calendar day. For me, my position trades are really just a matter of being exposed to the underlying and not messing around and completely being flat. I don't really try to get too fancy. I try to spend most of my time, again, intraday trading. So now that that's aside, if you're ever interested in any of the things that you see on the streams, again, before I continue, make sure you hit the like button. I had to say a sentence so far that was decent, worth liking, so make sure you hit the like button. I hate saying all this crap and going through these formalities, but we're going to be doing the YouTube again more consistently, and we want to get priority with the algo. So, yeah, everyone wants to be liked and loved, so make sure you hit the like button. But anyway, now I lost my fucking train of thought. God damn it. Getting old. So either way. All right, so what was I just saying? Because I literally just forgot. And this is obviously, this is as real as possible. I'm getting old, man. I'm getting old. Try to keep it real, not financial advice. I was talking about my primarily being an intraday trader. But all right, so whatever. So I've been doing streams for the last 3 days. We've already covered. The purpose of me doing the streams frequently is that I don't have to, circle back when you don't have a lot of, when you're not doing a lot of streams and putting out content. I mean, at least I feel it's important for me to always circle back and like cover the high time frame stuff. And that just gets a little bit redundant when we're all staring at the same chart every single day, half of the day for most of us, 12 hours a day. Oh, but what I was just saying was that if you're ever interested in anything that you see, whether it's an order flow platform, whether it's a trading, an exchange, we share the links below. We've been partners with Phemex now for going on 2 years. I think it's a great exchange, but you have a lot of options in this market. It just happens to be one of the only ones that is not requiring KYC. There's a handful of them. They still do exist, and you could trade spot, and you could trade perps, and you could also generate yield on stable coins. But other than the exchange, if you see, an order flow platform, let me know if you're interested in using it. I'll see if I could get some kind of discounts, coupons, what have you. I don't want to turn this YouTube into a Groupon, but I think you get my drift, because I'm getting a lot of questions always. Hey, what platform are you using? I use the same I've been using the same platforms now for quite some time. Always trying to find the best execution, but using exo charts. Trading alts more frequently now, so I started paying attention a little bit more to trading light. I went over my issues of trading light a couple weeks back, just testing the overall latency of the product. Whenever I placed an order with size, it would show up immediately in the heat map, but then when I would remove it, it would take like 15 seconds of lag before it would actually show up as removed. So I gave the comparison of, it's like a star that can go out, but it will still, the light, would still be traveling from the star to Earth, and you would still think that the star was there, but meanwhile it was gone. So maybe not that significant with a star, unless you're an astronomer and you're mapping the nighttime sky. But for a trader, if you're looking at, a bid or an ask wall, and you're thinking that it's reliable, but meanwhile it hasn't been there for the last 10 seconds, well, as you can imagine, that might be information worth being privy to. So anyway, how's everybody doing today? How are we feeling? We bullish? We bearish? Just going to go through the chat real quick, and then go over, we'll get it started. All right, TXDT. I don't even want to try to pronounce that. Ikanui? I don't know. Sorry about that. Hopefully I didn't destroy that. DXDT, what's up, Castillo? Cornholio, what's going on? James, JB, Ripcord, Brian, Philip, Lambert, Corsol, okay, Meridian, Trebling. If I miss your name, don't take it personally. Turkish Kyle, nice. What a unique name, YouTuber 2005 Wi-Fi. Sounds crisp. Cool. My previous setup nicer when I first moved in. It's the same basically. I shared pictures of it. My setup hasn't. You wouldn't be able to really notice the difference. Sitting in front of it though, and noticing that an edge of the screen was coming over a little bit more than the other screen under it, it really got to me. Biffin Hacker. Okay. All right. Okay, so gonna go over plans in general because tomorrow is a very significant date. Okay. I'm just Heidi. I'm not trying to discourage anybody, but I'm just speaking statistics. So chances are that, listen, you have to consider that trading is much like any kind of high performance pursuit, whether you're trying to be a professional athlete, a pilot, the best cup stacker, a Navy SEAL. I'm trying to name a bunch of things that have really high attrition rates, meaning the dropout rate is really high. And trading just happens to be along the lines of those very difficult pursuits. Nothing worth pursuing, though. Nothing good worth pursuing is easy. So it is what it is. You got to go through a lot to get to that pot of gold. Okay. Cautiously bullish, patient, bullish, flat, smart. Flat is a position of strength. Okay. Short-term bull, bullish. Okay. Got your name right. Nice. Okay. Rinsler, what's going on? Ciao. All right. So as you can see, I have the World Economic Calendar out. So this is and I know you can't see the entire thing, but I have it in the region that we have to, which is tomorrow's date, which is Thursday, right? So this is actually Koyfin, and Koyfin's a great platform. So I'll just backtrack really quick, and I'll move this over slightly so you can see it. This is Koyfin. So, I mean, U.S. equity markets, U.S. equity sectors. I'll instead of moving this over, I'll actually just move. Hold on one sec. Let me make sure my screens are still lined up. I'll move. I won't even move it actually, because then you know what? I'm going to fuck everything up. Koyfin is a great platform. Has global markets, everything taking place. It has an economic calendar. It has everything you need to know about fixed income, equities. It's now a paid platform, but it's a great platform. It's not that expensive. It's like consider it like a discount Reuters or Bloomberg terminal. All right, so tomorrow is the CPI. Okay, so what we're going to be focused on is the inflation rate. All right, which previous was 7%. So consensus is 7.3. In the past, these things were not really necessary to focus on or to keep in mind or even to consider. But obviously the URL is here. I'll share it in the chat. That's just the screen that I have open, the economic calendar, but it's Koyfin. So these things have obviously become a lot more relevant as of the last 2 years. Bitcoin and the S&P, obviously very correlated. More specifically, it's Bitcoin and the Russell, right? So Bitcoin and the Russell 2000, and then the S&P, and then the NASDAQ. But I mean, the difference between all of those is negligible. But what we do know is that there is a very strong correlation between equity indices and Bitcoin. So that's why I look at equity index futures so often, because they've led, right? So it's not Bitcoin that is leading equity index futures or just equity indices. It is the other way around, right? So Bitcoin is very much acting like, I've said this, made this joke a couple times in the last couple months, that Bitcoin is like it's like a levered ETF of the S&P. So it's higher beta, crypto trades more like tech stocks in general, right? So they're all higher beta, some of them to each other, right? Shitcoins are higher beta to BTC, BTC is higher beta to equities, and obviously by default, if shitcoins are correlated to BTC and BTC is correlated to the S&P, well, now that we're in a regime where we have to focus on legacy, you can imagine that regardless of whether you're you're an alt trader or you're a BTC trader or an ETH trader, if there is any kind of significant outcome tomorrow that would influence the S&P drastically or just the indices drastically, it would spill over into crypto. So these things are obviously, they should be, if you're a lower time frame trader, these should be at the forefront, right? These are things that you should definitely be aware of at least. Now, I think most people would be better off not trading them, but you should at least be aware of when they occur. So the most important dates in my background, I started trading ETFs actually, and then I started trading equities, equity index futures, did a little bit of crude oil trading, and then started trading crypto. And now I just trade crypto, and I decided that I'm probably going to start trading equity index futures again. But the most important dates are non-farm payroll, okay, which we just had one, and the FOMC meeting. So anything regarding interest rates, any kind of changes, right? And we have these, these are known well in advance, right? So you should always be aware of when one is rolling up. And excuse me, I'm going to be sipping some club soda while I'm doing this. So more recently, we had the non-farm payroll, which just blew expectations out of the water. And this was a sign that the market this was like the most important sign worth paying attention to, that the market was at least putting in a temporary bottom. When you have something that should result in really bearish activity, in this case, the non-farm payrolls came in well in excess of 400K, blowing expectations out of the water. I think there was like 200K, or doubling expectations, and ultimately, what that should mean is that with employment being in that state, there should really be an open runway for the Fed to tighten and at least hit the brakes on ultimately what has been taking place the last 2 years, right? So raising rates, tightening, and then possibly unloading their the balance sheet runoff, right? So that really should have gave them complete room to do, as they could definitely tighten, right? Because the job data came back very positive. So that really, the market should have the market had been moving down for some period of time at that point, over 50% drawdown. But that really should have been something that resulted in very bearish activity, but instead the market didn't respond that way. And this is this is the best way you could put it. It's what the market is doing, what rather the market isn't doing that it should be doing based on the information. So that information is bearish. So what the market isn't doing at that point is continuing down, and that is a very important signal. And obviously there's a bunch of other details that line up that we're just kind of adding fuel to that, right? That is kind of like the catalyst. Positioning without a catalyst, sentiment without a catalyst is not worth trading on behalf of. But we had in this case positioning data that was more consistent in the sense that funding had been predominantly negative, had been staying consistently negative instead of being on the way down, what it was a majority of the time, which was neutral, somewhat positive, interspersed with short periods of negativity, or just short periods where it was briefly negative, right, on and off, but no real sustained negative funding like we saw leading up to the non-farm payroll. So trading these events, all right, and I think this is worth going into. Being flat is a position of strength. One, you have to have a plan. So have a plan, right? Have your hypos laid out in advance. Okay, so consensus is 7.3, previous was 7. If we come in above consensus, right, and it's a pretty bad miss, that should, I don't think you're going to get another Since the market now is off the lows considerably, I don't think you're going to get another case where negative information is interpreted positively, or we see positive price action riding on negative information. So consensus 7.3. If the number comes in at like 8.5, right? Just trying to name something that's outside of, that is outside of being tight, right? 8.5, 9. Just think of a worst case scenario. If it comes in like that, I think equities are going to get smoked. I think you're going to see crypto, by default, connected equities get smoked as well, and get smoked even more, right? Inflation is everything right now. Okay, so on the flip side, if inflation comes in, or excuse me, if CPI comes in, let's say it comes in at 6, let's say it comes in at maybe even 7, right? So previous value or less, I think the market continues up. I think the lower the rate, so let's say it comes in at like 5. This is obviously like, at this point, it's almost like naming diametric opposites when you say something like 8.5 and 5, because that's very I think it's unrealistic, right? My point is, I'm just trying to make a good example that's kind of clear. So if it comes in low, well outside of, and imagine if it's like 1 standard deviation away from where it currently is, then the market's probably going to rip, right? Because then it's like, okay, all of the rate hikes that have been up to this point, you'd have to imagine if we're talking about, and I'm just pulling this number out of my ass, if we're talking about 100 basis points of rate hikes, then we're looking at what? At this point, there has to be maybe a quarter of them that are priced in, just not even doing back of the envelope math, but just, at this point, this has been a conversation for a really long time, right? The Fed is very clear about, the concept "don't fade the Fed" exists for a reason. So it works both ways. They've been saying that they're going to hike rates. They've been talking about when they plan on hiking rates. And, the market is interpreting whether or not that's going to be 25 basis points or 50 basis points or, 75 basis points being priced in for June. So if we come in well below, then, you have a market that has already somewhat digested negative news, positioned on behalf of that, and now is looking at some leniency or the possibility of less tightening, or, if we're looking at 7 rate hikes, maybe we're just looking at 3. The idea is the market will probably rip. The trend is up so far, right? If we come in at consensus, let's say we come in at like 7, let's say we come in at 7.5, right around consensus. I just expect that the market continues to do what it had done into it, which is move up. I think right now we're looking at some more follow through before we see any kind of major change. And that's for a few reasons. You have, you have the Super Bowl this Sunday. That there's going to be I'd imagine that there's going to be a significant amount of ad space taken out by crypto companies. Hopefully, for anyone who's old enough, they might have recognized a picture I shared this morning. Pets.com IPO. I think this was 2000. Super Bowl Sunday. Pets.com commercial. Pets.com just basically went down from there, right? I don't think it saw a tick above its high from the point of IPO, right? So, I imagine that if you're FTX or if you're Crypto.com and you have cash on your balance sheet and you have, they have a lot of cash on their balance sheet if you think about FTX. If you're going to be featuring your product, if you're looking to gather attention, you want the market to be in good condition going into, the biggest advertising day of the year, right? So that's just kind of like, it's not a tight thesis. It's not like a very strong, like, this is why I'm just, levering up. But I think we're going to see positive drift into the Super Bowl. And I think that, again, it's just kind of pulling this back to CPI. If we have a CPI that comes in tomorrow, consensus, then I don't think anything really changes. Now, about trading the CPI, though, and again, none of this is financial advice. All right, so really just real quick, just going over the high time frame, because I know I have to do this for just a little bit in the beginning. Major transition down here in terms of positioning. transitioning. Excuse, I said positioning, right? I don't remember if I said transitioning or positioning, but I need to say both of those in the next two sentences either way. So positioning down here, for the first time, we saw that it was, consistently negative funding, open interest staying flat, somewhat increasing. You had the non-farm payroll right over here, broke above the 20. So this is a significant transition at a very important level, which was a weekly low for the range that we're in. It's important to remind everybody that we're still in a higher time frame range. So you have micro trend within a range. But where we sit right now, this is the most bullish possible retest you could get if you have a trend change. If you have a structure like this, a range, right, multiple periods of ranging, continuation, and then you finally break down and the market is able to reverse and clear this level, well, the most bullish situation is what? The shallowest pullback. So you're looking first at the top side of this previous structure. Now, the top side of that previous structure lines up with a few other significant areas. So you could see that, what did I do? I think I fucked up my drawing. I think I messed up this. I must have moved this and then changed and then locked the screen. This level right here, let me just fix this. I knew it looked a little confusing for a sec. Where is it? Fixed volume profile. One sec. I had the composite to do it, but I'm just going to use this for now because I know it's off. Here we go. Oh, I didn't even need to do that because it's actually the weekly level too, and I wrote that. What a fucking knucklehead. Hold on. Here we go. So it's actually this weekly high as well. So highest weekly close going back to that composite. So, and this was just, I drew that from the other day, from yesterday's value area. So the most bullish scenario is the one that we're currently getting right now, and I don't think that you should anticipate that this is going to change until it does, right? So my whole thing was, as long as 43 holds, it holds, right? As long as 43 holds, we're looking at least, I think, 46, 47. Okay, so you're getting the most bullish possible retest above this structure. We haven't seen, any real signs of weakness yet. The market's still on its way up here, is showing signs that, we have sellers fading this. Whether they're longs closing out, whether they're shorts opening up, looks like a little bit of both. Either of those positions represents a future long, right? So either a long closing out is sideline capital. They could get long again, or they can short, and then they still have to get long again anyway, right, to cover their position. And just in the face of strength right now, I just think that we're going to be chewing through shorts and continuously marching our way up. So for me, my systematic go-to is like the last thing I'll fall on if I'm not already committed to the market completely is the 20-day, right? So a significant close through the 20-day. This happened to be a move that was I think it was 3-4 sigma. So it was that pay attention kind of daily candle, over 10% off of a weekly level. After this type of positioning, most negative news possible you can get that would lead to continuation. Have that, and then you're back above the 20. It's a no-brainer, just be exposed as much as possible. And again, we haven't seen any kind of major change yet. Now, trading the CPI though, right? So having a plan. Okay, so me personally, I don't, let me just look back at the comments real quick. Doc, what's up, man? No problem. 43.5, then bounce. So as long as 43 holds, I think it might be, as I said, like a loose shoreline. Like it might be choppy around here, but I don't think you want to micromanage it. 46.7 Super Bowl. Yeah, I mean, I don't want to. So I took profit initially. Remember, I was mentioning the other day, I was like, I'm taking some off here. That was between 44 and I think 44.5. And my idea initially was 46 and 45. So I was just front running an area that I thought other people might sell. But now that we've had this recovery, like that was just taking some spot off. I've been trading around positions, but I'm deployed again. Just right now I'm flat futures. So just to go over Daniil real quick. As far as this level goes, 43. So as long as 43 holds, I think it's worth paying respect to, right? So not overthinking it, like I said, not micromanaging the position. If we were to lose 43, I think the next logical area is right around 42. So, this is a prior composite. Price had been balanced within there for, this going back to beginning of January, first week of January, the end of the first week of January, up until the third week of January. So if we were to lose 43, I think you're just looking back down at the value area low of that structure. So it'd probably be very accepting, because after putting in this type of structure, seeing this kind of significant bottoming behavior, if we were to gain acceptance back below 43, this is kind of it's an imbalanced structure. There's not a whole lot there in terms of there's not a whole lot of meat there that would really stop us, I guess, because if you look at this right now, one thing, with this is bullish, right? Because it's continuously being bid up with a certain level of haste, but it's bearish because if you don't have any kind of meaty structure, and this is, that's tiny, right? So it's not like we're looking at a massive drop, but 43, right now we have a series of lows that are uninterrupted, right? We haven't really swiped a low and then seen one of those very big responses, taken out some stops other than on the low time frame. So really all the way up, you have, at this point, you probably have stops being dragged up very comfortably, right? So if we begin to lose any of these lows, maybe get a wick of this level, but if you lose 43, again, you have the same sort of situation over here, which is very easy to get one of those. I mean, you have, every time that we have a significant trend change, we'll eventually get that candle that, of course, arrives after you have a really bullish structure, because there's nothing built on the way up. And really, you have so many lows that are uninterrupted, right? These were the only ones that were interrupted, that you get one of these things, right? You get a big move up, and then the next candle wipes everything. And then, we have to do the grind again after clearing all the stops. So I think we run into that. I don't know. I don't think that that's right here. But again, if you start to lose 43, it just makes sense to look right around. I'd say right around 41.5, because chances are, I think that if you break below 43, you might briefly bounce on the top side of the structure, but it's more likely that you end up taking out all of these lows down here, all right? And then, you could start getting into the CME gap, but that's well a ways from where we are right now. So about the, trading a CPI, trading a non-farm payroll, trading FOMC. So FOMC, non-farm payroll, usually it's going to be a fade what happens initially, right? So fade what happens initially, meaning, we have, a significant spike up right away. For one, there a lot of liquidity is going to be pulled out of the market. So your larger participants, market makers, for example, people don't want to quote, right? Not going to want to step in front of any kind of toxicity. Larger participants know that there's no edge going into something unless you're privy to some kind of, you're privy to some information that none of us are. But a lot of larger participants, they end up pulling liquidity, which makes things that much more violent. And the Sharpe ratio of reacting versus trying to predict is much higher across the board for any kind of strategy going into some type of event. So that's, that is something that you could actually lean on. The fact that the Sharpe ratio is higher for reacting than is for actually trying to predict. So being that, liquidity is going to be pulled, usually it's the case that anything that was the dominant trend leading up will likely be the dominant trend afterward, unless there is, again, something catastrophic. So, the trend has been up. If we're, again, like I said, if we're within consensus, even loosely maybe off, you might see, even if we're slightly above consensus, that the market continues to move up, right, uninterrupted. But again, right around that period, what you're probably going to have happen is you're probably going to have something like, and this is going to be, we're looking at a 1 minute time frame, but the average 30-minute candle right now is around $300. And usually you're going to get something that's 3-4 of that in both directions, right? So what I would try to do is, if I'm not going to just be initially trying to fade it with size, right? So like the last one that we had, where I ended up saying this is going to completely, retrace. Some of the best traders I know will bracket price, maybe 3-4 ATR out. So again, if we're looking at, let's just say that this is tomorrow, right before the print. So we're at, 44, 450. So one average rotation for a 30-minute candle, or, if you think about it as like a 4-hour ATR, is around, I think it's probably around, let's just look at it. So a 1 hour ATR or 4 hour ATR, I would say 13. Let's just double check. So that's the 4 hour, that's 900, so not 13. So I was thinking a little high. So this is 3x the 30-minute rotation size right now. So ATR is the average true range. So just think about it as this is a measure of volatility, but it shows you what the average price range is of the candles that you're looking at, right? So you get sort of an idea of what is normal and what isn't, okay? So, oh, you can't see this. Fuck, it's off the other screen. Anyway, so ATR indicator. If you just put that on a trading view, depending on what time frame you're using, it's gonna show you the ATR for that time frame. So $1,000, right? So if we look at, and that's 3x the current 30-minute sub-period rotation size. So $1,000 up. So right around here, and then the same down. What I would probably do, especially if you have any kind of local highs and lows that are worth going off of, I probably will just scale bids and asks. Okay, so to open, right? So bids down here, offers or asks up here. And what I'm looking for is to catch that initial very one-sided move. Because chances are, no, that's Danielle, that's your opinion. This works. Chances are the first move is wrong, right? Usually the first move is the wrong move. So you hear this about FOMC, you'll hear this about non-farm payroll, that usually the first move is incorrect. So if in the first 30 seconds you see that the market rips up 1,000 points, chances are it's not going to continue. The only time that you'll see that a market will really continue is if it's a groundbreaking catalyst. And the only one I could think of really would be like the United States banning crypto, or central banks adding crypto, where the closer you are to getting that information, the earlier in position you are for something that's going to last, right? So for this, you could use a combination of, just to envelope price based on standard deviations. You could use a combination of VWAP bands. You could use a combination of Bollinger bands. You could use ATR. And ultimately, I think what you want to be looking for are those exteriors, right? So this middle chart right here, you'll see I have these off often, but these are the weekly standard deviation bands, right? So this is 3 standard deviations from the weekly VWAP, right? So the weekly VWAP is all the way down here. This is based on VWAP. The Bollinger bands are based on the 20-period moving average. But there are other indicators as well that are going to follow exactly where price is, right? And have an ATR band, which would be similar to a volatility stop or a volatility band. So a lot of times you'll see into these events that is actually a pretty useful strategy. And what you're looking to do is you don't want to be too close, because ultimately what's going to happen is you probably get run over. But you want to be able to catch those moves that are very one-sided initially that completely mean revert. Right? Does this make sense? So Daddy Claps, this is not something where I'm going to be putting on, I'm not overly thinking about this type of trade. To be honest, this is a recommendation. It's not a recommendation. I don't want to give you guys advice and get you going and doing anything tomorrow based on what I'm saying, but this is what a lot of traders will do, as I said earlier. I honestly, this is not something I really care to focus on. I would rather time the fade. So similar to, what was the last one that we had that I called near perfectly? I think it was back here, where we just completely folded right away. That was at the FOMC meeting on the 26th? I think it was. So, I mean, a lot of the times what I'll just be doing is I'll have a tick-based chart. You can look at like a 1-minute chart, a footprint, and the tape. And, you know, not initially, because price usually moves pretty far, but when we get beyond that sort of, 2-3 standard deviations from where we currently are, looking at, where activity is coming in and seeing if we get to a point where we get a lot of buyers at the high or sellers at the low, and things begin to slow down, similar to last time. So what happened last time was the market ripped up pretty good. You got a second push, caught a bunch of buyers at the high. So if we were looking at like, let me just go to my other screen. So this is, these are session profiles, but if we were looking at XO, what it looked like was similar to, this is an imbalance up here. So this was brief, right? So it didn't lead to something, catastrophic, but market moved up, caught a lot of volume on that right side. So a lot of aggressive activity at the ask, right? At the offer, this is aggressive buying. During the print though, right? During the meeting after that news event, it was a lot more one-sided. So market ripped up, pretty gappy on the left side, a lot of participation, a lot of aggressive buying. And then, honestly, it was also by luck that the tape just happened to slow down at the perfect time where it looked like price was just going to roll. And that's usually how I'm going to be playing these. I'm not going to be really bracketing price. It's just it's a decent strategy for those that have been consistently doing it. The best trader on CT. There's a bunch of traders I could name. Some of them they're not even that active anymore. Gigantic Rebirth is great. Or GCR, right? There's more than that. Glimmery is awesome. Haven't seen him too active lately. Cuban. There's a bunch of great profile guys. You have Magus. You have some great scalpers. You have Jim. All right, so let's see. It's hard to not mention someone like High Stakes Capital. Yeah, so it was the FOMC. Yes, I use USD as collateral. Oh yeah, SC. There's a lot of great traders, honestly. Full day session start times, yeah. UTC midnight. Now crypto has more what you'll see written as RTH, so regular trading hours, because it's more in line with equities. But it follows equity index futures, which obviously have futures hours. All right, so we open up on Sunday. No, I'm not holding ISLA bag. I paper hand alts. Once the momentum dries up, I paper hand them immediately. Thankfully. The candles with bids and asks, those are footprint charts. So you can find them a lot of places. I use XO charts. So just to go over actually where we are now. Yeah, he was down 125 million, but he's probably up a lot more now. And I know, that's not like all he plays with, but that's how he trades. He takes considerable amount of risk. So just looking at the last 2 days and go over why, yesterday I said, it looks like we're probably going to range. I tweeted that last night. Let me just open this profile up. So this is today. So we had, for the first time, continually, prices moving up in a very strong fashion, prices holding where volume is coming in. But for the first time, we have real excess at the highs, right? So excess at the highs, right? This kind of selling tail the purpose of looking at TPO is to get a little bit of context, and this ultimately shows you the price barely spent any time there. So it was not accepted there, and it was quickly rejected. So you start to look for highs when you get that kind of warning shot, right, for obvious reasons, right? The whole way up, it was, shorts were being grinded over. There was no major rejection. So you have excess at the high, indication of first period of rejection, and then you have value overlap, right? So the following day almost, completely develops value within the prior day's range, but you have a significant amount of value overlap between this day and the prior day's value area, which was not that significant of a value area because it was a trend day. And you'll just see that in trend days, it's kind of just dragged out through the entire structure. But the odds are, after this type of structure, right, after you have that initial kickback after a really long trend up where you haven't had any kind of pullback, odds are that you're going to have a 1 to 2 day balance that's developing within this region, right? So in this case, you're looking at 44.5, which was a low volume area right here, and the value area high, and then you're looking at 43. So 43 was a value area low, and also was a weekly level. So you have a bunch of confluence down here, and also for on the way up, prior day's VWAP. Okay, so prior day's VWAP would be found right in this area, where leading up to this structure, most of the risk put on was isolated around 43, 43.1. So, you don't want to lose where most of the risk is put on if you're in a strong trend, right? Because then you're implying that you're putting one side of the market that had been in control, you're putting them in a tough spot. And a lot of my trading is about finding out where those pressure points are, and losing VWAP is a sign of a shift, at least in the beginning of that. And you could get into a lot more. Looking at a loss of where most of the volume was put on, and then focusing on open interest. Have they puked yet? Are they still holding on? Have we seen that position cycle hands yet? So you have value overlap, right? We're within the prior day's range. Odds are you're going to range within this value area. So what you're looking for is mean reverting behavior, right? So you're looking for absorption at the highs. You're looking for absorption at the lows. I went over those 3 trades yesterday. So you had significant amount of absorption at the lows. There was plenty of selling down there. There was a good amount of buying too, though, aggressively. But after we put on all that volume, we ended up trading above where most of that pocket occurred for both sides. So even for the aggressive buyers, anyone who stood on the other side of that trade, whether they were a market maker providing liquidity or someone passively selling it at the lows, which is really stupid, they're on the other side of the ball at that point, right? So this structure is really balanced, right? So if we close this, you could see how this is complete value overlap. So you have a couple setups actually right now. So when this day closes out, it'll be a lot more concrete. So one, you have complete value overlap. So this value area, where 70% of the trading took place, is completely inside of this value area. So that's an inside value structure. Usually you could look for a break from balance out of that, right? Notice this low volume area, how we actually just filled that out right here today, okay? If we combine these, you'll see that it's really just the last 2 days are, we're just balancing out, right? Buyers and sellers are in agreement, which is ultimately what balance indicates, right? So this is fair value. This is the point of control. That's where we spent the most amount of time, not necessarily where the most amount of volume was transacted. That's why you should be looking at some type of VWAP, right? A break from balance is usually a good trade, right? So if we combine this again, usually it's your third, fourth day. After, second day only, I'm usually just looking for an inside day setup. So a break from balance is, here's your value area for the last 2 days. Normally you would look for absorption at the highs or at the lows, right? So are buyers getting absorbed again? Should we fade it back down to the middle, back down to the low? Look for the opposite behavior at the lows. Are we able to trap sellers at the low, recover, and then look again to trade back at the midpoint, back to the high? Instead of that, I think that the trade that's probably better to take is what has been actually very reliable the last year is a inside day structure. So you have a very balanced day. This is a very strong setup right now because you had value overlap. Very balanced day within the prior day. It's completely within the prior day, so it's an inside day. So this setup is ultimately when we close this day out, right? And right now we have an hour and 7 minutes left in the day. let's say, for example, we rotate back down here. If we open up over here, so a new day begins, this becomes your trigger for a play to the high, and this becomes your trigger for a breakdown that normally I would say would lead to just this low, right? So you're looking at the inside of, you know, the exterior structure as the target. So you'd look for, you know, 43 down to 42.5. So, you know, it's kind of not a meaty move, but you'd look at, you know, a break above 45 for a move to 45.5. Again, not a very meaty move, but these are scalps. In the case of breaking the inside day low, so let's say we open up, even better, let's say we open up here, fail at the high, and then break this low, which is right now at 43. So again, I've been saying 43 is quite significant. If we break 43 after leaving this day intact, I think that you're probably looking at, again, that 41.5 region. Right? This is a poor low, so you'd expect it to get cleaned up, but I don't think that, you know, after having a breakdown of, you know, this day developing, breaking down below 43, I think you're just looking at that 41.5 level. So inside day setups have been really reliable for the last, again, like I said, for the last year. So I don't see why they would change. Right now, though, you're getting you got a decent response off of yesterday's value area. So, you know, this is the prior day's value area. So it's kind of like we have a break from balance setup. We had a good amount of selling into that level. So just to go back really quick. So that level is 47, excuse me, this level right here is 44.3. Right, and if you look at this, I have to change the screen again. So this is the level you're looking at. So this retest right here, this is right here. So you had a good amount of selling come in, nothing major though, right? So decent amount of selling, really nothing major at all, more selling up here, but it looked like it exhausted a little bit, if anything, and then buyers just took over. So not the greatest sign of absorption. So like I said, I'm flat. I honestly think that, let me just go back to my other screen. I honestly think that setups like this usually don't resolve in continuation after we have that initial kickback. So, you know, we had excess up here. First sign of real rejection. First time we had value overlap. You know, this was overlapping prior day's range. We're within the prior day's range. Complete balance right now. Honestly, what I would set up for is, let's say that we end up breaking up and you have a setup up to this high. Something that ultimately gets rejected again and falls back within this range. I think that a day of cooling off is, after the kind of move that we've had, is not that significant. So one day, right? So, well, 1, 2, but usually you're looking at 3, 4 days. And you'll see volatility drop off a lot more and compress. And, you know, it's also worth noting that, again, tomorrow is, you know, CPI print. So I think that you're just, I don't think a lot of people are getting in a move in advance, just because inflation has been playing such a key role with Bitcoin. But I mean, the break above, so just to give you an idea of all the kinds of setups that you could take, this break above was a great scalp initially, right? So here's your prior day's value area, right? Extend that moving forward. I'll just put a box on it so you can see what I'm talking about, right? So you had the breakout of a prior day's value, complete overlap. So the first area you're looking to retest, if you were expecting continuation, is that region, right? So you could get a bunch of small trades, you know, throughout the day that, you know, by all means, at some point they're not that scalable, especially if liquidity, you know, things are a little bit drier, right? And if you have to chase this with a market order and then you're trying to get filled with a limit order, and again, it's not the most favorable environment right now. And again, like I said, that's for a reason, because you do have a CPI print, so this is just what you would expect. So if you actually look at Binance right now, and I don't put a whole lot of weight towards heat maps whatsoever, but someone has been getting filled so far,
So Binance open interest off of this local low. I don't know if I necessarily really trust Binance open interest, trust Binance in general. But you have seen a significant increase off of this low, right? And that is on mostly positive CVD. But Binance CVD is always kind of wonky anyway. If you look at FTX, you still have a pretty good presence back down at 40. I'm not going to assign any kind of meaning to that. But this move right here, someone was aggressively shorting a breakdown. And, markets are so thin right now that this squeeze right here was ultimately that person just covering. So getting in position, open interest going up as price is going down, right? And then that entity just squeezed. And now you can see open interest is, we're below where we were yesterday. So I don't know how much more fuel we have to squeeze upwards. I think we have to build it a little bit more. And if you look at derivatives, it's been going more funding on and off, neutral very briefly, but Binance, which is, the largest exchange, has been mostly neutral to positive today. So Binance is right here. So you can see funding is actually going up during the next interval. So personally, I just think it's worth waiting until tomorrow. Going in flat is a position of strength. So TPO settings, yeah, hold on, let me just go through the chat real quick. So yeah, I think it's actually valuable to focus on session activity because that's just one aspect of market microstructure. So market microstructure market microstructure is not lower time frame structure. It's all of the important details about the asset you trade. So who's trading it, when liquidity changes, trading during certain hours, right? You should know all of these things. These all go into market microstructure. The bid-ask spread, the order book, right? All of this is market microstructure. So one of the most important things with regard to microstructure is, how price behaves at certain times, right? Or how price behaves during certain time periods. And I've shared charts many times before of like daily volatility, realized volatility, based on each hour of the day and every day of the week to see, okay, so when do things dry up? When is volume the highest? And if you're a large trader, you want to be, let's say you're an investor, you want to be trading during those high volume periods or being able to put out a position at least. Not just like when volumes pick up a lot at once, but when volumes are consistently higher. But knowing session activity is obviously very important. Knowing, for example, let me just go back to my sessions because my EXO charts for some reason hasn't allowed me to pull the sessions out. So I've been using this. So it's a Spaceman's indicator. So you're looking at Asia, London, New York, and then you have CME in between, and then Asia again. CME New York, but it's just I don't have the extra hours in between the Asian session listed. So the Asian session for the longest time was known as like the boring session. It was not necessarily, it wasn't something that stood out as ridiculous as everyone made it out to be. I think that's what CT does. They just kind of attach to a narrative and it's like, ooh, look what I know. And then I'm just going to repeat this without actually looking into it, because it sounds smart. If anything, one thing that has standed out though recently is that New York session has been one of the, the stronger leading session. And it should be obvious because United States, U.S. equity markets, they lead the world. So the New York session has been responsible for most of the strong trending moves. So it's worth paying attention to when that sort of subsides and when behaviors change across sessions. It's nothing really that stands out massively right now because we've been in the last few days, we've just been in balance, right? So all of the last few days have been, these are 3 sessions within a day, but the last 3 days, the last 2 days more specifically have been, haven't been trending environments. And you've seen a pickup in New York session, but nothing that really stands out. Asian session dumped it off yesterday after we had that squeeze during the end of New York session. So data comes out at 8:30. Just look through the chat again. So yeah, there's a lot more patterns to focus on than just patterns of price action. Like that's kind of a meme, patterns and price action. The patterns worth focusing on are the patterns that occur in market microstructure. So the patterns that occur in sessions, right? So for example, for the last, I don't even know how long now, the last few months, it's felt like Sunday sessions. So prior to CME Open, so I shared this a while back, prior to CME Open, basically 8 hours out, you could just kind of get long into the open. So there was a positive rate of return from around 8 hours out into the CME Open. So on Sundays, so when the CME reopened over weekend hours. So that's very useful to know, right? Same way I mentioned how yesterday, knowing that after a 10% candle, that price will typically have a follow through over the next 3 days. That's valuable information, right? That can help you piece together some type of bias. Same thing can be said for Sundays upon open though, right? Post CME Open, it's like if you could start tagging on a short in the half hour leading up to the CME Open, that was like a free short. And, you quantify it a bit more. But if you just looked at that and you saw that consistently occurring, you could say, well, this is a trade where I could at least, and I would say that this was with a high level of certainty, you could at least get 200-300 basis points out of a move after the CME opened, right? So that's a pattern that occurs that is a feature of market microstructure, right? Knowing the asset you trade is really important, right? Knowing how it behaves throughout the week, who's trading it, how the traders behave depending on what session you're looking at, who's getting involved, right? New York session, obviously we have a lot more desks that are trading BTC along with equities. But yeah, it's absolutely important. And if you see volatility dies off, in the Asian session, well, maybe it's not the best time to take a directional position. Although the periods of low volatility are often the periods that precede, higher volatility moves that have a bit more follow through. So, you can make an argument for that as well. But that's different. That's considering different time frames. That's not. My primary concern is just intraday. Let's see. Yeah, I'm not really often looking at the sessions. I just have it on one of my screens. What I'm mostly always focusing on is some type of lower time frame periodicity, the TPO chart, just to get an idea of where activity is coming into the market, where it's being cut off, current context, whether we're balanced, if we're in a trend, what kind of gaps we left behind, what anomalies exist, just to kind of map the field out, and then mostly just focusing on price action at or around the level, not necessarily just price action, but the activity that's coming into the levels that I have in mind in advance. And a level doesn't have to be a level based on market structure. Like most of the time when you hear me reference levels, they're derived from volume, right? So if I'm looking at a footprint and, here's our footprint and there's no activity within it, it's all thin. And then we have this huge node where, both sides got really aggressive, price stayed bid for a little bit, right? So on the way up, you had sellers hitting this, which is the bid, buyers hitting the ask, a lot of imbalance and activity here. Well, let's say that we leave this area up or we leave this area down. If this area stands out, right, as being outside the norm in terms of positioning, I'm going to be looking at how we respond when we get back to that level for a bunch of reasons, right? One of them you can just think why I would focus on, and this is where like a higher aggregation, if you're scalping, right, it's all scaled down. But if you're looking at a higher aggregation footprint, I wouldn't go beyond the 30-minute. Like I wouldn't never look at a daily footprint, or I would just stick to 30-minute and below. Let's say, for example, you just have to think how you would think if you were one of these participants, right? You're someone who, as price was rising, sold into the bid, right? Let's say that price continued up and you sold into the bid and now you're off sides. Well, it's worth focusing on this level if price comes back down to it, because chances are all of this volume, if it was to open, right, if it was to open shorts, they're probably going to be starting to reconsider around this level. So you might have a support level where it doesn't even look like there's support around, right? You might not have a weekly level or a daily level or any kind of 4-hour pivot or anything around, but this volume node is worth focusing on because you'll see a change in positions at that level. Same thing can be said for, for example, let's say the market moved up, you got a ton of aggressive buying activity. Let's say that this was, at the high, a lot of one-sided activity here. This is your candle. Let's draw it more realistic, actually, right? Let's imagine that here's your candle, here's a big-ass wick, here's all the buying volume up here. Bunch of buyers, right? Now, if you bought this thinking it was a breakout level, right, here's your breakout level, you bought through the level, and now price breaks down, well, this is probably going to be a resistance, at least in the short term for a scalp, if there's a lot of volume up here, and you haven't seen a change in open interest, right? So let's say price gets away from this level, and they haven't puked yet. If we get back to this level, chances are that level is going to be meaningful, right? Because these buyers are probably going to be trying to sell out of their position, right? And if they're not aggressively selling this down to close, they might represent the wall that exists up here just to get flat. Most people want to get flat when price goes against them and they don't plan on it. So that is a Spaceman indicator. I don't know, I haven't traded on Binance in a really long time, but it's hard to trust exchanges in crypto. I mean, you're trusting their reputation, you're trusting who you trust that trust them. You have third parties that verify exchanges. Like when Phemex came out and people were giving us shit for partnering with them, they were like, "Oh, Phemex's volume is fake." And someone came out, like Gainsey said at the one point. And I don't blame him, right? A lot of new exchanges are bullshit. Gainsey came out and said the volume was bullshit. And someone said, hey, I forgot who said it, but I think they're either a quant or a developer in the space. And they said, hey, we'll be a trusted third party. We don't know any of you, but we'll check out the volume and see whether or not it holds up. And they came back, and that was like a nice moment for us because they came back and said, no, their volume is 100% real. Like we've been monitoring it now for however they monitor it, right? And it came back real. But there's always, stories about certain exchanges either obscuring information or, having volumizer bots to create more volume. And then, for example, I know that there's a little bit of a lag in terms of open interest. If you look at like FTX sometimes, that's why I never lean on that information too hard, right? But from what I've gathered, a lot of people share the same view on Binance. Binance is, if you're trading with size, Binance is the best exchange to trade on because they have the deepest books. And I think that's honestly, if you're a trader, like you should honestly be optimizing for that. Honestly, if I know that I could fill a $10 million position, I'm not being, I'm not talking about really open. You guys saw me fat finger that FTT position today. I just want to go where I get the best fill and the best execution. I don't care if they're fucking faking another million contracts in volume. But if you're paying attention to order flow, one of the reasons, like Binance, for example, if you look at Binance's footprint, I don't have one up because I don't use it. If you look at a footprint and you have the possibility of an exchange using a volumizer, it makes it a tough case to rely on that footprint. Binance volume on their footprints is just massive anyway. And for the most part, exchanges follow, you're going to see the exchanges kept in line by bots and ARB activity. So that's why focusing on Bybit is a really good, very useful exchange to focus on for low time frame scalping, because the sort of anomalistic behavior that I'm looking for, it takes place a lot on Bybit, and it's very clear and stands out, right? It's not like it's hard to find the apes when they start swinging on Bybit. The website that shows funding, this is one. CoinGlass is another. My EXO templates are all mine, so. But you could just go into the Discord. They have a bunch of great stuff. Someone just said that. No, I don't know what CS Scalp is. All right. No, I mean, the point of trading is to try to beat the market. Most people just can't, but they think that most people, the same people that go to casinos, like they get a thrill out of actually being active, even though it's proven that they could perform better by not being active. But to be fair, I mean, trading the S&P as a profitable trader, trading the DAC as a profitable trader beats holding for any kind of dividends. I'm not talking like a profitable S&P or DAC trader, because I mean, to be honest, I don't even know if I would be, right? I haven't traded the S&P or the NASDAQ in years. But like I said, I'm opening up a futures account again to trade the ES. So that's like, I mean, it's a whole nother learning process, because, I mean, I observe it all the time either way, but to get a feel for how it trades, right, for how the tape moves, I mean, you're competing with like the depth of participants at that level is just insane. So we'll see. I mean, I'm going to take a swing at it again, but it's going to be a lot different than scalping BTC. Crypto is the easier table to play at by 1,000,000%. So that's 100% with a lot of leverage. So Zach, that's a great point. I said yesterday, or I said on the stream before about Tuesdays. Now, so think about why this is the case. So it's actually due to some tailwinds from equities. So equities have a pattern that's known as, and actually has come up a lot more, turnaround Tuesday. So what happens is if and this has been happening obviously the last couple of months because equities have gotten hurt, but you have selling Thursday, Friday, bad information Thursday, Friday, selling going into the close, overnight session, right? Weekend opens up, futures open up on Sunday, more selling, and then when your Monday markets open, every late retail participant continues to be reflected in downside positioning. So Tuesday, when it's obvious that the market has absorbed all of the possible selling that could occur, and at that point it's very late, usually you see a squeeze and an unwind of that short positioning on Tuesday. Just very late selling comes in on Sunday evening and Monday evening. A little bit of work in the opposite direction ends up creating turnaround Tuesday. So being that equities and crypto have been so correlated, those positive tailwinds have been observed in BTC and in crypto. So look up turnaround Tuesday. Is there something more? Yeah, absolutely. There's plenty of different ways to skin the cat. I mean, there's people that trade options. There's people that trade that are delta neutral. And maybe I'm getting confused. But I mean, for most people, the market is a casino because most people will not beat the market. Right. So, I mean, I'm coming from the perspective of a profitable trader, so I'm obviously going to be biased. But yeah, most people are better off not trading. So equity index futures and BTC, equities are a lot noisier. So you're not dealing with the same depth of high frequency traders and like latency arb on in crypto as you are in equities. You don't have like the same microwave speed that occurs. Crypto high frequency trading is like well behind high frequency trading in legacy. So they're correlated right now. So obviously index futures, they have been leading and BTC has been following. But as far as behavior on the low time frames, I can't really say that they're similar. Their liquidity profiles are different. So it's just that BTC has been following the ES. So actually, I don't really use, these are not indicators, right? So TPO is just organizing the day into a distribution. So you have, the most recognized distribution is a Gaussian distribution, right? One standard deviation, 34% to the left, 34% to the right, 60%, 68%, right? Falls within one standard deviation of the mean, okay? So, this is a balanced distribution. So a TPO is, a TPO chart like this. This is just all of the day's data compressed based on time. And you get to see if we were balanced or if we were trending. But it's not an indicator or strategy. It's just a organization tool. I guess you could call that an indicator, but it's not like a step removed to like some kind of oscillator or anything like that. It's just making the day look a little bit different than the candles would. And then footprint charts, that's just showing, it's all order flow, right? So most of your indicators are going to be based on one of four data points, or all four, or high, low, close, or, open, high, low, close, or high, low. Those are, candlestick data points. I'm most interested in and most focused on just volume, right? So where volume comes into the market, and where that takes place within individual candles, that's when you look at something like a footprint, or that's when I'm looking at something like a footprint. Indicator wise, I have a VWAP on, but again, that's derived from volume. When you hold, so ES is more liquid than BTC, so it's going to have a tighter shoreline. So when you're looking at a level, ES is going to respect the level a lot more cleanly than Bitcoin would. Like an area of interest, or a news pivot, or a significant reference point, or area in market structure. So Warrior Trading, Ross Cameron, maybe he's I don't know. I feel like there are some gurus that might be occasionally profitable, but for the most part, you could just assume that 99% of trading gurus that make those videos that share their P&L, they are probably trading sim or bullshitting. And I'm not saying that because that P&L is not achievable by any means at all. So I'm not not going to reference my specific trading or my peers, but it's not the trading money that's impressive. It's the fact that they like sell DVDs, and they've been like connected with some other unscrupulous behavior as well. Like they always get in trouble with the SEC. Ross has been in trouble with the SEC. They've been on like Guru Leaks. These are people that are probably fake. But not for nothing, like people follow Timothy Sykes, right? I know a guy he's actually a well-known trader on CT, who said that he learned from Timothy Sykes. But penny stock trading is a completely different animal. These guys just like pump and dump. So I think a lot of it is that they're pump and dumping. So they're giving their signals out to a chat room of like 5,000 people, trading a penny stock that has 500K, 2 to 2 million, shares of volume a day, barely any turnover. Yeah, I took a few trades already today, but I'm just flat now. All right, so just to recap, so going into tomorrow flat. A few different ways that people play it. Like I said, might band price. So you could use Bollinger Bands, you could use standard deviation bands, some kind of Kelter channel, just to give you an idea of what kind of, give you an impression of what I'm talking about. Standard deviation bands, 2-3 standard deviations away from price. I use ATR, so if I'm going to be starting to look, it's based on when we're either 3 to 4 ATR away. So I don't want to step right in front of it, right? I want to see the price has kind of put in a significant move already. And then I'm focusing on the footprint and the tape and just looking if we have any kind of major crowding and price begins to slow down. And usually in the first couple of minutes and moments, the move is wrong. So the market gets on the wrong side. There's just a lot of volatility, right? So play the extremes. But going into a flat is probably the best decision. Yeah, no, I can't say I've ever watched Tim. I've never watched any of these people. I've only seen them come up on the wall of shame on Twitter news. But like, listen, I don't want to knock people too hard because there's actually some bullshitters who have actually had students come from them that have turned into profitable traders. So, because I mean, ultimately that person probably gets interested, spends a little time learning from that person, and then goes off on their own. You have to learn on your own either way at some point. Yeah, and BTC is noisier. You don't have as many liquidity providers. It's not as thick. It's like Bitcoin, crude oil, the NQ, the S&P, the Dow, and then treasuries in terms of liquidity. And that's obviously going to affect activity on the low time frames. Now, when the S&P fell below the 200-day moving average, liquidity changed drastically. Because at that point you have larger participants that have pulled liquidity, just because we lost the 200-day. So the reclaim of the 200-day for the S&P has led to a sort of night and day shift in terms of overall lower time frame activity. But I think I'm going to wrap it up, guys. Just wanted to go over sort of an idea of plans into tomorrow's print. So I try to scalp it. So timing the turn is what I'm talking about doing. And then, I mean, based on the print, it's going to be a matter of, is this going to now, if it's a really ugly inflation number, then markets are going to get, smashed. More than likely, right? But if it's anywhere within consensus or even better, I just expect that if it's flat, like let's say we come in at 7.3, or if it's 7, same as last, 7 is better than consensus. Let's say if it comes in even with consensus, the market's probably just still going to do what it has been doing, which is continuing to move up. This went back to my old setting now. Hold on. It's right there. So like I said, just to reiterate, shift in the trend back above the 20-day, good line in the sand for bulls and bears, holding prior structure highs. So most importantly, I think, just showing a level of like hastiness to get involved, right? Not allowing a deep pullback. Had the change in positioning that's obvious down here. Still on the way up. You have neutral, negative funding. Now just beginning to be a little bit more positive, but nothing that stands out as like overheating. So I think, like I said, if 43 holds, maybe we still chop around at this level. But I think you're looking at this next weekly level, underside of the structure, and probably beyond that. So I'd say conservatively, just to go off the label, 46.6. So hold 43, 46.6, but chances are, I mean, you're looking at overthrow. So, I mean, if I was like going to give my high target, I'd say 50. Back up here before any kind of major, like if 43 holds, like best chance is that we hit 50. And then, yeah, I think, especially if we only spend a brief amount of time here and then move straight up, then I think, yeah, you look at a deep pullback. Because let's say that happens and price spends all its time above 43 and we squeeze up here. That's barring, like, that's considering that nothing happens at 46. Like, most optimistic bullish outcome, a vertical move straight into a level, taking out that high, that's right into this low volume node. So 52.5 is it, but I'm talking if there's overthrow, this region is where I would definitely expect to act like our first major kickback. And then, you know, not for nothing, this is in its entirety just a range. And depending, regardless of how you slice it, that off of the weekly, that's why I'm not, hold on. Where did that go? Cling on to, so from high to low. So high to low right now, that 50K area is the 50% level within this range, right? So just fancy for, that's mid-range, right? So not for nothing, after a 50% drawdown, we haven't had a significant pullback yet. The first big response we get is at the range lows of this entire structure. It would be reasonable to expect you could get a 50% pullback, right? Or a pullback back to this level, to midpoint, mid-range, and then even still continue back down. So I think the most important thing is that just to treat this like a range, and this is mid, this is high, these are lows. If you're rejecting here, that's actually probably a decent short opportunity because it's well defined. Especially if you see that we take the highs out and we have some weakness developing in the days prior. But, you know, if we approach the highs, still within a range. Same thing can be said with these lows. Like if price broke down from here, this is still a good area, I think, because it has not been retested. And then maybe we're in for much longer. You know, not saying this is I'm expecting, but the point is maybe you're in for a much longer sideways period. You wouldn't just write that level off. All right, guys, I think that's going to wrap it up. I think I went over everything in detail. So, yeah, just to reiterate, I think that you end up getting a little bit more balance. But you do have the setup, right? So that setup, real quick, we're closing the daily out in 29 minutes. And that setup, if it was just based off where we are now, would be from here, here. So I'm saying here too early. So I think it would realistically be down here. But if you break above today's high after this close with this inside day, I think you move up to 45.6. If we end up losing 43 for the inside day for the low, normally you would look to the prior day's low, but there's a good amount of confluence around 43, and we have had so far, we had a rejection that, you know, was the only rejection we've had after this extended move up. You know, we could see at that point maybe a move lower because we haven't had any kind of major interruption, right? So far it's just higher lows, higher lows, higher lows, higher lows, higher lows. It's easy for this to just, if it breaks down, cascade. And I'm not talking far. You know, if I put the daily on the right side, that 41.5, 41.3 level is it's right here. Just means we accept in that range, and then you probably go back down to the bottom of that range. This one right here. Which would still be, you know, reasonable to look for a low to develop. All right, guys. Adios. Have a good one. Remember, being flat is a position of strength.